Hello everyone, this is Jim from Data Finance. Welcome back to our channel. We are with you on 10th of December and closing the week with you. We have just received 30 minutes ago, almost 30 minutes ago, US inflation data. US inflation has risen to 6.8. It is the highest number in the last 39 years. It is the last in the last 39 years. It is the highest number. So the reason is mainly is oil prices because we have seen really high prices in November. Yeah, you will say that all right, the prices have fallen, but they didn't like a gas station didn't decline the prices, so still compared to previous month there was a slightly rise in fuel prices, in gasoline prices in US. That's why we have seen this happened in US market. All right, we will just cover some news and then we will just go ahead with our charts as classic. On the last day of our video, on the last video of our day week, we are covering dollar index, gold, and US oil. All right, we are starting with dollar index. As you can see here, the reaction, the first reaction is just dollar index has dipped to under 69 levels, but this support level, but then it started to increase. This was as expected happening, so because people just gave a reaction to dollar index, but then this inflation data, but then they just realized, all right, so there is only one way to stop this inflation is just stopping tapering and then cooling the market. That's why this decline in the dollar index is transitory. Yeah, I know, like you like this transitory word, but it's not like a transitory inflation. This decline is transitory and eventually it will go higher, especially when we get closer to Fed meeting on the next Wednesday, because on that meeting the rate decision, there will be no rate change in this decision. It's not expected, but the tapering is being expected, at least a double amount of these tapering. Right now it's only $15 billion cut in quantitative easing. We may see $25-30 billion cut in quantitative easing. That will just cool down the market a bit, and at the end of this tapering, then it will start to go ahead with rate hike. So if they just finish this tapering as early as possible, that means we will see rate hike as soon as possible. It finish up. That's why I'm just telling that the gold prices and the other prices has just risen so fast. People just thought that all right, it's just going up and will try so high levels. No, it won't try, because eventually US 10-year bonds will react and their return will go higher, and with that return they will just yeah, above these inflation rate. It has to be, otherwise there will be negative income, still a negative income territory. So people will switch on those bonds and the prices will go down of these commodities. As you can see here, it is just trying to go up. The decline, more than of its decline, it recovered and rebounded, and more probably will cover soon, and it will just go up like this. It was on a trend already to go high. These data just stop for a while. It's a break, but we will see more higher levels in dollar index soon, as soon as as we are getting closer to Wednesday FOMC meetings. All right, let's look at gold prices.
You are ready to win with us. GAN Markets.
Alright, as you can see here, gold has tried really high levels. Let me just show you in 1 hour chart. You will see better. Alright, yeah, it's more clear in here. It was trading just before these data, US inflation data. After the release, it has risen so fast. And then the next hour as well, like it has risen a bit on this hour, but then with rebound of like dollar index, right now we see that decline. It's not going further and further. Reason is, as I said earlier, US 10-year bonds will eventually will recover, and then we will see gains in that side. That gain will affect the price of gold more and more. Was just reaction, just a hedge reaction, a sudden reaction to high inflation data. But we will definitely see lower levels in gold if like the hawkish scenario, hawkish speeches of Fed goes on. In my opinion, it will go on, because otherwise there will be a lot of pressure on Fed, as they are not helping to curb the inflation. They are just feeling the fear, and it's not helping to economy. All right, let's see what will happen, and then we will just talk about more. But as you can see here, rise has been limited. Yeah, you will say, oh, $10 rise already, but yeah, it's the highest in 90. It's the 39 years, and it was trading at like a 70.75 already. So right now it's just $9 increase in gold prices, so it's not really big increase, and struggling. Yeah, you see it's struggling to go higher, and probably from these levels we will see some easing, because it's always happening like that. Just big gains and big falls, big falls and big gains. It's always happening like this. And RSI also getting to really 70 level, to overbought level, so there will be a correction on that one in close term. As you can see here, this level already kind of resistance area, so we will see some relaxation from here. All right, let's go to our last chart, US oil. All right, US oil, as you can see here, it has risen first, but then it's with the rise of dollar index, right now it's coming back. All right, as you can see here, it's just declining because oil will be on the target of inflation, of that inflation pressure. Because if the oil prices trade at this level, there will be never easing in inflation. So they will do whatever needed. They will speak with Iran, they will speak with even Venezuela or some other countries, but somehow they will, the government consuming oil will just make the price of oil lower levels. We will see that. We will definitely see these in oil prices, and it has to be something like that. Today on Bloomberg, central bank manager of Libya has just spoken some, and he said oil around $60 is good for us, and it's good it supports our economy. So he even said they are expecting something like that on long term plans. They are making the plan of US oil around $60, because if you just speak something more and more, then on your daily life as well, you speak like that. If you're just speaking in your conversation or your meetings, and the target of oil as 60, so on a speech you just speak like that. So probably they're expecting $60 levels in oil, and as you can see here, it's making to go higher with these trials, but each one is just being rejected, and we see declines and these level here. As you can see here, 1, 2, 3, and getting closer rejection. If it gets rejected so much, just like this, look at here, then we see decline. It's getting rejected from these levels. If really a worst scenario in Omicron virus doesn't happen, then we will see this decline go on and we will see lower levels in US oil. Thank you so much for watching us. We will be together on more news, and we will cover more analysis next week. And as I said, today's data, US inflation data was 6.8, is the highest level in last 39 years. Have a nice day, have a nice weekend. Bye.